All right, so we're going to try round two for you guys today, trying to air this piece with Blackrock CEO Larry Fink, talking a little bit about the the EFT markets, and of course, maybe how the rest of the banking industry is going to react to what could be a recession coming down the pipe. This really came to us today out of a tweet, and I'll break into all that stuff. My name is Paul Barrow. Welcome back to the Tech Path. Eleanor Terrett tweeted today, basically, Larry Fink would be coming on Fox Business with Liz Claman and Gasparino, mainly talking about the issue of the Bitcoin spot ETF. And the question I think really is at the front of everybody's minds right now is what kind of impact will this have on the market and the timing in which an ETF maybe could play into, whether it is Q3 or 4 that comes into this, or rolling into maybe even as far as Q1. A lot of changes have happened just in the last week, as you guys know, with Cathie Wood and her ETF, along with Blackrock, all making modifications to their ETF filing to adjust and name Coinbase as their transparency partner from an exchange standpoint. And this was something that, of course, we've tweeted about a couple of times. If you guys aren't following me on Twitter, make sure and do that. It's just at Paul Barron. But I got into a few things this weekend, really kind of tracking it. And one of the big things, I think, is just the continuation of a lot more funds and a lot more institutional capital looking at going the route of Coinbase. So we'll talk in a little bit about that before we break over to the interview. Watcher Guru was in to just talk a little bit about that, was Volk refiling for their spot ETF. And I think that, again, goes back into naming Coinbase as their asset partner. And then if you look at a couple of things here from just the Fed minutes, pretty straightforward. I think the key is that there was some mixed ideas happening during the June meeting that really, I think, were revealed in the sense of some people were wanting to pause, some people felt we needed to hold the current hikes. And now what we're dealing with is a potential on where things are going on the scenario for, sorry about that, guys. We'll get off there. One of the things we're dealing with now, of course, is how the quarter basis points will be rolling out throughout the next part of the year. And one of the big factors there is the issue around when. So timing here on ETFs, whether or not we truly get into a recession, and then the big part right here is when those quarter points will actually inject in. Because remember, two things that really play into this is going to be consumer credit and jobs. Obviously, we've already seen consumer credit at all-time highs. Jobs also are starting to break loose in the sense of a lot more unemployment coming into the market. And that, I think, is going to be a big factor on whether or not we're going to see a full-on recession. So I'd love to get your feedback on it. Let me know down in the comments if you feel like we are in for a serious recession toward the end of the year, or do you feel like this is actually changing the narrative here with what's happening on Wall Street and obviously what's happening with the Bitcoin and the crypto markets themselves. Fed minutes obviously have markets dipping a little bit. Traders are calling for more rate hikes. That's kind of interesting in the sense that we'll see two more in the terms of the 25 basis points. So again, love to get your feedback and go from there. But we're going to get into the live stream here shortly. I wanted to showcase a couple of other things. This was a little bit surprising even to me, and that was less than 10% of all Bitcoin currently trading volume happens in the U.S. Now, it's not surprising in the sense that we've seen so much pressure, from the SEC to really kind of, I think, at some point cause a little bit of hesitance, I think, of most of the new market. When you think about where Bitcoin has come from since the beginning of the year, from around 16.5 to where it is today, it's doubled in no other asset class has moved like this. And even with that, here in the United States, for us to only see a 10% of the current trading volume coming from the US is pretty striking in the sense that maybe what the SEC is doing is actually working, and it's opening up an opportunity for a lot of the institutions. And if you think about this timing, a lot of institutions seem to be coming in at the right time. Now, is this meaning that this is the bull run that everybody has been waiting for? This was a newly released report from CC Data that's suggesting Americans' exchanges have been giving up more and more of their share of Bitcoin since January. And obviously, most of the problems have really occurred in the last 6 months as we continue to see more pressure and obviously the Wells notice over to Coinbase. Other things to be watching for, this was Jeremy Allaire, and this one is, to me, is a pretty significant statement coming from the head of Circle. With Hong Kong's ecosystem coming alive, super impressive how broad their support for Web3 is here from government, banking, industry, developers, etc. All of this now seeing broader momentum across Asia. This is a big deal because has Hong Kong and other countries started to really show into it? It looks like they're getting ready to have Fink come on live here, and we'll cut to that here in a second.
BlackRock's first application, actually, it's already been kicked back. The SEC demanded it name a surveillance partner to spot things like fraud and manipulation. And late last week, BlackRock and NASDAQ refiled, naming Coinbase as the custodial surveillance partner of the spot Bitcoin trust. The crypto world pinning its hopes on BlackRock, which has a track record regulators say they find too good to reject. At least that's what people think. BlackRock's 576 ETF applications, 575 have been accepted, and just one has been rejected. I know you're all asking which one. I'll tell you later. It was in 2014. As the entire crypto sector waits and watches, joining us now in a Fox Business exclusive is BlackRock's chairman and CEO, Larry Fink, along with Charlie Gasparino. Great to have you, Larry.
Liz, Charlie, it's good to be here on a summer day.
Yeah, and we're cool in here.
We are.
Larry, I know that per SEC regulations, you cannot get into specifics. But as you look at all of your track records when it comes to iShares and approvals, how do these things work out? How long does it take? And what do you think odds are of any of your ETFs that you float getting accepted?
Well, we try to do what's right for the long-term investor, and I think we have a good track record working with our regulators and trying to making sure we're thinking about all the issues around any filing. And so I can't get into the specifics of this filing, but I think the chart speaks quite well. We work really closely with our regulators, and we want to hear from the regulators what are their issues and how can we fix those issues around that. So we hope that, like in the past, we could be working with our regulators and get the filing approved one day. And I have no idea what that one day will be, but and so we'll see how that all plays out. Specifically on Bitcoin, as I've said in the past, we're a believer in digitization of products. ETFs was a big revolution for the mutual fund industry, and it's really taking over the mutual fund industry. And we do believe that if we can create more tokenization of assets and securities, and that's what Bitcoin is, it could revolutionize again finance. And so we look at this as an opportunity to move one step further in terms of providing investors fractions of shares, fractions of this, democratizing the cost of investing. Over the last 10 years, we've lowered the cost of iShares ETFs by 30%. So what we're trying to do is make it more accessible, more easy. The attempt in terms of what we're trying to do with crypto is make it more democratized with all of crypto and making it much cheaper for investors. Right now, the bid-ask spread for crypto is very expensive. It does erode a lot of the returns that you speak about because it costs a lot of money right now to transact Bitcoin, and it costs a lot of money to get out of that. And so we hope our regulators look at these filings as a way to democratize crypto, and we'll see in the future how that plays out.
You were never a crypto skeptic like Buffett. I mean, Buffett and Charlie Munger come out and they say all this bad stuff about it. But you were kind of skeptical.
Yeah, I was skeptical because the early users it was heavily used for, let's say, illicit activities. And I think as it became more accessible, and also I do believe the role of crypto is it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country, or the devaluation of your currency, whatever country you're in, let's be clear, Bitcoin is an international asset. It's not based on any one currency. And so it can represent an asset that people can play as an alternative. I would call, the foundation of BlackRock is about hope. You invest for retirement because you believe tomorrow is better than today.
Right, but hasn't the technology sort of diverged from the value of the digital coins? I mean, I don't know a lot of people who use the blockchain. That's the Bitcoin technology to transact. I know a lot of people who hold Bitcoin. You don't hold Bitcoin, right?
I don't own anything other than mutual funds and
BlackRock,
ETFs and BlackRock shares.
Okay, but you see what I'm saying? There's been advancement. There's a utility, it seems, out of nowhere about this digital coin. I don't see the utility in the underlying technology, and isn't that bad?
Well, no, I actually believe the underlying technology is fantastic because the blockchain will help you accelerate the processes of transactions. The blockchain will help you identify. I mean, let's be clear. If you have a pure blockchain and you have knowledge of who the buyers and sellers are, we could then, we don't need custodians anymore. Okay. We don't need, the whole process of finance. Some of the intermediaries are broken down. And so this is why we're all studying.
There, but we're not there.
We're not close to there. But it's an advancement of technology. I mean, it's no different than the spirit around AI and what AI can do.
Larry, as we look at the broader market here, we have come out of a bank crisis. I don't know, it was a mini
crisis,
fit or something like that.
A little mini
crisis. Didn't feel mini to the banks that went under, three of them.
Yes.
But the very issues that put those banks under, whether it was bank management in relation to higher interest rates, have not gone away. Now we've got the roller coaster coming right at commercial real estate.
Yes.
Are there more banks that you foresee failing, whether they are the regionals? We just talked to David Rubenstein at the top of the show, and he thinks maybe in a couple of years we will see some of these go away.
We have 4,400 banks. We have more banks in the United States than any country in the world. We believe in local banks, so we have a strong foundational belief that local banks are good. But to have 4,400 maybe is too many. Liz, you framed it perfectly. I believe interest rates are going to continue to go higher. I think the Federal Reserve is going to have to do minimum of 2, but maybe as much as 4 more tightening.
4 more rate, 25 basis points.
25 basis points, another 100 basis points. I actually believe inflation is stickier and more structural. And so I see a future of higher interest rates. Higher interest rates is going to create more stress in commercial real estate. Commercial real estate is the largest asset category of regional banks. And so there may be stresses.
That's a problem.
But the first 3 banks did not have stress on credit. They had stress on their mismatch of their assets and liabilities. Could we move towards more of a crisis towards credit? Absolutely. Is that systemic? Probably not. It's not. It doesn't have to be systemic.
It's not the big banks. I mean,
it's not the big banks. And more importantly, the economy is really strong now and getting stronger. It's not getting weaker. We have the 3 large stimulus packages that were enacted over the last year, the Infrastructure Act, the CHIPS Act, and the IRA. It's all just starting the J curve. This is going to, and it was $1 trillion over many years, but of stimulus. It's just entering the economy.
Some say it's been too much.
Yes, but it's entering the economy the same time.
Where are we in the cycle of spending that? Do you know? Halfway, 3/4?
5%.
Whoa! That's it.
We're just starting, Charlie. This is just happening, and so think about how many jobs it takes to rebuild airports and freeways and ports. The job demand from these acts is going to be enormous. And so here we are talking about commercial real estate as it may be a problem, but the stimulus that we're going to see in the other parts of the economy is extraordinary. And owning companies that are involved in the rebuilding of our infrastructure, these are going to be good long-term holds.
Well, some of that has to do with what you have been behind for many years, and that's ESG,
Right.
environmental, social, and
We
governance.
could say those words, right?
I don't say them anymore.
Oh my God.
We won't go there.
Larry, much of the nation is broiling hot right now. I mean,
Yes.
we can throw up a weather map, and it is pretty unbelievable. A lot of records have been broken,
Yes.
particularly in the Southwest. Texas is melting records. The town of Tahoka broke a 110-year-old record. It's been nuts. They hit 116 degrees. Last week, the state hit a new record for electricity demand.
Yes.
But what's interesting is much of that demand, as conditioners are running at full speed, comes from sustainable.
Yes.
So whether that's solar
Yes.
or wind,
Yes.
it's filling that demand. And yet, the state of Texas doesn't like you guys.
No, look, Texas is, but people don't understand. Texas is the #1
For a little bit. It looks like they've talked
in
kind of.
renewables.
I'm going to cut in on that
It is also
for a little bit
obviously
here. It
the
looks like they've
largest,
kind of dropped the topic
state
around
in-
crypto and Bitcoin. A couple of things that some of the audience have already brought up, and I would agree, is that some of his statements there. First, digital gold, that was a big one. The other aspect of this is the tie-in to Coinbase. So they seem to be his swagger, at least the way I look at it from reading him. When you go into business, and even though Fink has been on air before many times. And I was very intrigued that he didn't come out as a more negative position in the early days, and kind of has adopted this somewhat neutral position on crypto and Bitcoin. And only now he's all for it, mainly because of the underlying technology. What is surprising to me is the fact that we're going to continue to get mainstream media that is essentially not knowing really what's happening here. And you could kind of see that with Gasparino's statement of that there's no utility. If you're following the space at all, you already start to see the underlying utility that is playing into this market. So I think Fink's getting a little bit smarter on this, which I think has put them into a play here for an ETF. So definitely a lot happening around this. One other scenario that I wanted to showcase here, this is Cuban going on the offensive right now. And as you remember, Cuban had a head-to-head for insider trading with the SEC, meaning a head-to-head lawsuit, which he won, by the way. And I think he is a big proponent of what's happening in crypto. I still think he's going to play into the political arena at some point down the road. I think crypto, Bitcoin, and other digital assets will be a big part of that. But his statement right here is that if the USA and the SEC had followed their example by setting clear regulations that required the separation of customer and business funds and clear wallet requirements, no one would have lost money on FTX. Now, I don't know if that's completely true, but the point is there would have been a lot more transparency around that, and this debacle that was FTX would have not even had even a blip on the radar, because it would have been caught and hopefully procured in terms of just a soft landing for it. So I think that is the bigger issue. The concern I have, and I think with Fink being on Fox Business, he may have this as well, and that is right here, this statement. Embarrassed to be an American when things like this are being proposed. This is beyond authoritarian. This, of course, comes from, and I'll just show this tweet here. This is, of course, Rep. Sherman, which we've had on our a lot of our videos that we do when we do these hearings, and a lot of what we broadcast around what's the recaps of the congressional moves around some of the regulation lineups, which we're getting ready to have a major one here this month. So Rep. Sherman, of course, now proposing an amendment to the National Defense Authorization Act, basically saying anybody that's trading more than 10K in Bitcoin would have to get some sort of national disclosure or approval. That's the kind of thing that is very totalitarian. These are the kind of things that starts to push a lot of innovation offshore, and it's one of the biggest problems that we see in terms of adoption. So definitely one that we're going to be dealing with for sure. Here was Eric Balchunas kind of talking a little bit around, has institutional trust returned to crypto? And if you go and listen to what Fink was saying in the earlier part of this video, he hit on a lot of points here. He didn't say just Bitcoin. He included the word crypto. He's also looking at the underlying utility aspect, which means that most likely we'll see something happening in the Web3 space. You already know that there is going to be, I know, that there's going to be an ETF filing for Ethereum. You know that's going to be coming. And when you look at the movement of what Fidelity has already made on their own platform of just investing in Fidelity, in Bitcoin and Ethereum, I think the writing is on the wall. This is And now he's making his first public appearance about this. That's an exclusive on Fox. To me, this is all moving in the right direction. So like many of you guys are saying, watch for Coinbase. There's going to be, understand the relationship between what's happening with BlackRock and Coinbase and their tie-in, along with many of these other companies that are moving into this, including 21 Shares, which is Kathy Woods, and ARC's ETF. And then you've got Valkyrie coming in, all of which have been selecting Coinbase. This is getting very, very centralized in the sense of where these ETFs are going to be isolated. And of course, Coinbase will be the one to watch. I don't know. I'm going to check with the Crypto Pit. Are they going back into any additional content on Bitcoin or on crypto? Doesn't look like it. Okay. I'm going to wrap up here on a couple of things. This was a Raul Powell tweet. One other way Coinbase is going to dominate crypto if the U.S., if these things go through. And that's the whole point right there that Balkunas was making right here. Again, remember, this is Fidelity, Wisdom Tree, Van Eck, Invesco, Galaxy, all refiled spot ETFs, naming Coinbase as the exchange. Nothing from BlackRock, but that has now been done. So again, this gets back to the whole point. Everybody's pointing in, and it might be the reason, if you've watched some of our Kathy Wood videos, we did one last week, that could be lining up around Coinbase as maybe a surprise deal with the SEC, or possibly a complete shift in their business model. That's the one I'm a little bit more concerned about and how that plays into it. Remember, the regulation will be a big part of that, and the regulation coming from both Maxine Waters, we've talked about it with Patrick McHenry, and this is what's happening right now in the month of July. So get ready for it. We're going to have Ron Hammond on from the Blockchain Association this week to talk about that very bill that is being adjusted. And remember, last week, Maxine Waters had reached out to Gary Gensler to be able to pull through their assessment on how they could help draft this bill in a way that they could get it passed. So that is all good news, I think. And of course, not a bad thing to be able to get Larry Fink coming in as well. All right, guys, we'll take a few questions. I don't know if we had a poll. Did we have one? No poll. Let's take a few questions and just kind of drop in on this. Coinbase and the Robinhood stocks going up. I would agree with that a little bit, General. The one thing that I'm still questioning about Coinbase is how do they adjust off of the scenario of some of these named securities? When you look at Solana, Matic, Cardano, et cetera, that were pulled off of Robinhood, how do they deal with that with the SEC? There's going to be a situation, I think, for sure. Thanks a lot for the super chats today. Let's go into one. Sergeant Brees says, I don't believe when he's saying he doesn't have any Bitcoin. Yeah, you know, we'll see how that goes. Michael Otu says, I'm going all in on Coinbase shares if that is the case. And that's the way we're playing, because I'm playing hedging with Coinbase and looking at maybe getting into Coinbase stock again. This will be something that will continue to play out. Let's see, what else do we got? Eric V says he's making sure to say crypto as well as Bitcoin. Yes, that was a point that we were making earlier. Definitely a big one. And I think, again, the whole issue here is the fact that he's gone on record now. He's now on one of the big business shows, and he's starting to maybe make his little press tour to help identify this. Remember, BlackRock still needs to be able to pull in the masses, and I'm talking about people who are not in crypto today, to be able to pull them in. And the only way he's going to be able to pull them in is doing exactly what he did on Fox Business today, and that is getting everybody to realize this is going to be a safe opportunity. And it's an opportunity for tomorrow, which is what we always say here. Long-term investment strategies, by far the way to go. All right, guys, if you like us to do these kind of breakdowns for you, let us know. Smash the like button before you leave. And it's one of the ways we know this worked for you. And if it does, great. We'll do more of them. We do a lot around the congressional hearings. We do a lot around these kinds of spot lives, all these kind of things. But we'd love to get your feedback, and always leave some comments down below. We try to get to as many of those as well. If you're not in our Diamond Circle, get in. It's really easy and free. We'll leave a link for that. And we do an additional podcast and some other content over there that you don't get here on YouTube. So it's the place to be. And of course, if you guys want to catch me, it's out there on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.